Hello all, welcome you all in my another episode of interview preparation. Here I have with Ashish. We are going to discuss about few technical questions and answers parts which will help you to prepare for a fund accounting jobs in coming time. Whether you are a freshers or experienced, these questions and answers will help you both. All right. If you haven't listened my first episode, I would request you please listen that first because this particular episode is quite interlinked with the first one, because in the first one we have discussed about introductory part of this interview process, and in this half we are going to cover a few technical questions from trade processing and corporate actions side. So without taking much time, I would like to initiate this questions and answers now. So hey, hi Ashish, how are you?
Doing good. How are you, Shivraj?
Okay, I'm doing well, man. So shall we start? Are you ready?
Yes, I am ready.
All right. So tell me, what are the different types of corporate actions?
Basically, there are the three types of corporate actions. We usually doing the reconciliation and fund accounting. First one is the mandatory, which includes the stock dividend, stock split, dividend, and it is not impacting our reconciliation now. Later I will explain. The second one is the voluntary, where investor get a choice to buy or retail investor get to choice to do, like it is a tender offer or buyback. Another one is the mandatory with the option. It is like a DRIF, stock dividend, where it includes. So the most of the complex break when I working as an industry, we have a dividend break. Just I want to elaborate in the short. If we get a dividend breaks, so we have to be take care of the ex date, pay date, and record date to maintain the things. The first thing we have to, if we have 1,000 quantity for the same in our portfolio and the 10 rupees is dividend, so the on the ex date it will go to the 90 and the 10 rupees is dividend, so it not impacting our NAV and reconciliation as well.
All right. So let me know. I have one question around dividend receivable. Let's say you have recorded dividend receivable of $100 in the books of account on X date, and on payment date you have received $90 against accruals of $100. So can you tell me how we can resolve this discrepancy, or how we can adjust the difference of $10 in this dividend process?
First, we have to understand why it is not get processed correctly. We have to understand the root cause, like broker is missing or our client is missing. So we have to calculate with the basic, like what is X date quantity, the quantity is available. Like we are taking that in client report, we are taking the 1,000, but a broker has a 900. So that's why the discrepancy will become. The first is the root cause analysis, and then we have to share the calculation to the broker, to the custodian, that X date we have 1,000 quantity, not 900 quantity, and that's the reason the 10 rupees dividend is missing.
Have you heard about double taxation?
Double taxation I did not heard, but I have heard about the taxation which we usually use as a withholding taxes, and I'm guessing that same you are asking.
No, it is little bit different than the taxation part. Okay, so have you heard about reclaim of taxes?
Yes, reclaim of taxes means if our fund is listed in US and we are sitting in the India, Japan or something, reclaim means the government is doing like we have a taxation. First we have to pay the tax on our income is 25% on our income, but sometimes the same government giving the reclaim also like 10% discount at their side. So we have to reclaim after the tax we have paid, and we have to just 25% is tax we paid and 10% is discount. So we have to pay only 15% of our dividend tax.
All right. Now tell me, why company announce stock split?
The major reason I believe is to maintain the liquidity. Like if stock price is very high, 1,000 rupees, so everybody cannot buy. or the quantity will be less. So to increase the liquidity in the market, for same reason, the company declare the stock.
Then why this doesn't apply in case of MRF shares? I am sure that you would have even seen on stock exchange where MRF stock price is 1,25,000. All right.
Yes.
If I apply your logic which you are talking about, which is liquidity, then why this doesn't apply in case of MRF stock?
Shivraj, I can tell you your question is correct, but sometime the company will not want to disturb their reputation, their goodwill, and they want to not have a high amount of investor because the MRF is a big giant, the renowned company, and they want not much liquidity in market because already they are renowned. But a small company, they already always do this type of break. It's like one company is not doing, so other company is not following. It's a simple. We have to be liquidity is the main for 90% of the company.
All right. So another question from corporate action sides. Now tell me, let's say you're holding 100 shares of, let's say, ABC Corp, right? And now ABC Corp announced 1:2 stock split ratio. All right. So market price of same 100 shares was around 10,000 total price, and you were holding around 100 quantities. Right. The ratio is 1:2, means for every 1 shares you will receive 2 new shares. So ratio is 1:2. If you're holding 1 share, so you can say like for every 1 share you will receive 2 new shares.
Yes.
Now tell me, what would be the impact in your portfolio due to this stock split action?
Nothing will be impact because if stock price is 100 and is giving 1:2 on the pay date, it will 100 rupees price will come to 50 rupees, and the quantity will be doubled, like 200 quantity will be done, and no impact on the NAV and reconciliation as well.
So you said on pay date or ex date, which one?
On X date. On pay date only. The X date is what amount of quantity we have on same, but impact will be done on the pay date.
But in terms of accounting, which impact that we consider? Ex date impact or pay date impact?
I guess pay date impact only.
Okay. No, not pay date. In accounting, we always consider the ex date impact. All right.
Yeah.
So tell me, what could be the exceptions, or maybe what could be the reasons of trade fails in banking or accounting, or maybe in investment banks or in fund accounting?
Usually at my scenario, when I go with checking the trade, we have a Geneva system for booking the bookkeeping of all the trade. So usually the trade has failed due to the correct file is not available at a client side or broker side to book the trade. As well as the first thing we are analyzing is the root cause why the trade has been failed. So root cause may be the system failure. The second root cause may be the file is not available at given period of time when the system is running its auto files. So that is a part, and then accordingly we design all the resources, and we are reaching to the custodian why this trade is not booked, because the trade is available on given resources.
Okay. So can you tell me the importance of trade confirmation and affirmation?
The trade confirmation and affirmation play important role when we are doing the trade processing activity. The trade processing activity start with the trade initiation, trade capture, trade executions, and then trade validation come. When we get a order from the broker, from the client, and broker is putting order in behalf of the client, and behalf of the client order, broker is putting So it is accurately doing the correct order as per the client, like price, security, IDs, and the market price he want to buy is correctly or not. That's why the trade valuation confirmation play important role. And we are sending this information when we trade is booked correctly, after we are sending a confirmation and affirmation email to the client to confirm that this is a order request you have given and we have booked accordingly, kindly confirm, and then we are moving to the settlement part.
All right. So next question would be, so do you know how amortization and accretion works in fund accounting, or how we apply the accounting treatment to the amortization and accretion part?
Amortization I have heard, but the other part I did not heard. But if you give the opportunity, I can explain.
Yes, please go ahead.
Amortization is something like a depreciation on the fixed asset. We have a separate rules that GAAP has made. GAAP, like generally accepted accounting principle, has made, and accordingly we are doing the calculation. But I did not know the technical. If you have a just brief, if you have a time, you can just briefly guide about me. It will help in my future.
See, amortization is nothing but it's just payment schedule, the principal payment schedule along with the interest payments, right? So that schedule will call it as a amortization, and it looks like a depreciation. So every month or every quarter or every year you can apply the certain factor amount, maybe 10%, 20%, and you can repay that debts to the borrowers or your creditors, basically, right? Vice versa, depends on the situation. So that schedule will call it as amortization. And if I talk about accretion part, it's incremental value. So in case of zero coupon bond, what happened? Let's say bond price is 100, which is a redemption price, and issued price is 20. And let's say that bond will redeem in 1 year. So it means you're getting almost 20 rupees as a discount. Correct. So 20 rupees spread that you can split across 12 months. So every month, basically, you will receive certain amounts. But that amount at the end, it will settle in the at the time of maturity only, at the time of redemption only, right? Okay. So that a discount, that total discount amount, or I would say whatever premium amount or premium that you're going to receive from the fixed income securities, so that premium you can call it as accretion. Basically, it's an incremental value on fixed income securities. Okay. So that you can treat as an income, basically.
The 20 rupees is the incremental, and we call it this
accretion. Did you get this?
Yes.
All right. So I'm done with questions. My questions. If you have any questions, you can ask it. Otherwise, I'll request my audience to wait for another episode. Meanwhile, do not forget to like, share, and comment your opinion in the description, and also help others to share this content with them, and let them also understand the process of fund accounting interview, especially. All right. So any question, please, Ashish, go ahead and ask.
No question, Shivraj. Thank you so much.
All right. So we'll see you in next episode, guys. Thank you very much.